All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. We have an earnings report this morning out of Under Armour. And you don't have to look at the numbers. You don't have to look at where the stock is. You don't have to look at anything except for one of the first comments out of the CEO to know where the stock is. And it's very easy. You see these, with companies a few times every earnings season. And when you see something like this, you know the stock's going to be down big. What do I mean? Well, here's what the CEO had to say. Our second quarter results give us increasing conviction that our transformation continues to make solid progress across business, unlocking efficiencies that are driving greater precision, consistency, and repeatability by staying sharply focused on our long-term strategies, driving our premium athletic brand positioning through industry-leading innovation, geographic expansion, and creating deep connections with our customer. We are on track to deliver against our expectations in 2019. Sounds nice, right? Definitely pulled out the old thesaurus here, and just used some. What are they? Inspiring words, right? Transformation and consistency and precision. I mean, not just precision, but greater precision. But you take a look at this. Did he say anything? Right. First thing, nothing specific. Nothing specific. When there is nothing specific, there's nothing there. It's one of those first giveaways that, hey, this was a pretty bad quarter. We also hear CEOs say this all the time. Increasing conviction. When a CEO has to say increasing conviction, he's selling, right? He's trying to sell shareholders. It doesn't work. Doesn't work. Last but not least, on track to deliver, long-term strategies, right? So number 3, long-term strategies, right? When a company has a bad quarter or they're going to have some bad times ahead, it's always talk about the long term, right? Let's get out of looking at this quarter. Let's get out of looking at next quarter. We're talking about the long term, right? And all of these make sense in the long term. And he's absolutely right. This is an earnings report where, there's some long-term positives. But, man, there's some short-term negatives. And when you see these three, they're talking about the long term. They're trying to sell by increasing conviction, and there's nothing specific. It was a terrible quarter for one reason or another. The stock is down 10% or more. Whereas Under Armour this morning, it's down 15%. And rightfully so, has every reason to be down 15%. In fact, I think you could argue that it should be down a little bit more when they cut their guidance and, they cut their revenue guidance, right? It's one thing to miss on earnings and, the market's going to forgive that kind of bottom line, snafu and look at kind of what's going on. But when you miss on revenue and you lower revenue guidance going forward, that's something that investors don't forget about anytime soon. There is one positive, though, in the report. If you take a look at their margins, a nice little uptick in margins, which, I do suspect will give the stock a little bit of a floor. But like any company that has this type of earnings report and this type of earnings reaction, what do I expect? Well, I expect a bleed, right? We're eventually going to hit a new low. It may be, hey, you pop a little and then hit a new low, or you bleed and then pop, right? But we're gonna see a new low come into play, and then before next earnings season, we're gonna see the stock come back towards this level or somewhere in this gap. And that is the typical. I fully expect that that's what we will see from Under Armour over the course of this coming quarter. And, we'll look to play it for the challenge when a signal steps in and hits. Now, speaking of the challenge, we have one position on the board right now. That's Honeywell. Honeywell down about 12 cents. We had the market down, 12 points. So, Honeywell hanging in there. You look at the overall market, just going nowhere, right? This is a 1 hour chart of S&P futures for the last, month? And the market is just going nowhere. The range is tight. The net movement is very inconsequential, and so we just kind of see the overall market, nothing changing, still that same stagnant, position here for it. Now, Honeywell, our option is 273. So let's go fill that in here for the challenge. 273. There we go. And let's see. Do I have that added in here? 30. Yep. All right. So, we're up $90. Nothing to write home about there. So holding on to Honeywell, nowhere to go with it. No time stops, no nothing. So we'll continue to hold on to Honeywell. Now there are no new signals on the board here this morning, but there is an industry that has a chance to have 3 signals here today, and let's go take a look. Before we do though, there is one 3-7 upside crossover on the watch list, and it's Vulcan Materials. Now, Vulcan Materials has had an upside crossover, downside, upside, downside, now has an upside. But the consolidation component is changing here today. So this may be something, by this afternoon, might look a little bit or might have a trigger here on it. This is, though, one of those stocks that added to the watch list, not knowing that I'm not going to be able to trade it every time it triggers. Why? Because of the option spreads. And right now, the option spreads are absolutely ridiculous. And so just not going to be tradable for the challenge if the spreads stay like this. I'll keep my eye on them throughout the day here, but just not a realistic trade, even on a signal if the options continue to look like that. And we have several of those in the watch list, right? That I added here. We have Alcoa, which is like that. We have Triple D. We have Whirlpool, which is like that. Where sometimes they're going to be tradable, just sometimes they're not, simply because of the way the options spreads are with them. But I've added them here because they perform very well with the algorithm. And but anyway, that's Vulcan Materials. Now, the group where we're seeing a lot of downside 3-7 crossovers is in the metals group. Things like FCX, Alcoa. Here's FCX, downside 3-7 crossover. Now, you'll notice where it is relative to its trading range. It came up and hit a new short-term high just recently. So normally we're not going to get a bearish signal on that, and I would be very surprised if we got a bearish signal on FCX. But it does have that 3-7 crossover. You take a look at something like Alcoa, also has that 3-7 crossover, but you'll notice that it's in a little bit of a different position relative to its highs, right? And, just starting to break on down here. Now, Alcoa's in that position of, okay, is the option going to be tradable? And if we come in and we look at, we go out 30 days, just go to the monthly, the option spreads are 10, 8%. If we go a little deeper in the money, they get a little lower on the percentage side, but the delta relative to it is not very good. So it would be a tough play to make. But also in the group, U.S. Steel. And U.S. Steel has a downside 3-7 crossover happening. The stock is a little bit better in the stochastics position, but this does have a better chance than FCX of triggering to the downside here today. But I suspect it would need to be down about 30-40 cents later on here today. But better options when it comes to U.S. Steel, a lot more playable within this space. But we do see this space kind of all doing kind of the same thing. Again, the consolidation risk on them is just too high here this morning to go out and play, but we are seeing this kind of across the board there. And no coincidence that it goes with the U.S. dollar hitting new highs, right? I mean, U.S. dollar just continues to march onward. We have fear of Brexit starting to come back and a hard Brexit as some, words kind of go around that maybe the UK is just going to back on out of the EU immediately without a real good deal in place. So, there's that fear that's helping to drive the dollar up. A lack of, real progress in trade talks between the U.S. and China, also helping to push the dollar up. And, the fact that right now the Fed is seen as more hawkish than dovish. And you say, well, how can you say that? How can the Fed be more hawkish than dovish? Now, it's the market's perception of the Fed, right? Hawks, right? When you talk hawks, we're talking about the rates going up or tightening of monetary policy. When we talk doves, we talk about rates going down or loosening of monetary policy. So how can we use the term hawkish when the Fed's going to cut rates here tomorrow? Well, because they're only going to cut by 0.25 in terms of expectations, right? And, the expectations for a little while had been 0.5. So, they've moved from, a 0.5 to 0.25. They've gone in a hawkish direction. So, yes, they're cutting, but the directional movement is more hawkish. And since they've kind of taken a little more of a hawkish stance, we have seen the U.S. dollar climb and push up to a brand new high. Now, very surprising to see gold sitting near its highs as the dollar is pushed on up to new highs. And I think that just speaks volumes to the long term of gold. And, you've heard me, preach gold all year. And, I'm not one to be a gold bug and every reason out there is bullish for gold all the time. But we've talked about just the massive change in the long-term charts and in just some of the trading activity and investment appetite for gold. I mean, you look at the volumes here, even on the GLD ETF and the pickup on them on the upside. It's very strong on the monthly chart. We've been in a 5-year just tight consolidation with gold, and it's absolutely in a long-term breakout mode. Now, where does it go tomorrow? I'll let others guess on that, and I'll wait for some signals to jump in for the challenge. But we're seeing gold holding up and staying near highs, with the U.S. dollar hitting new highs. That is pretty remarkable. That is something we don't see very often. And to me, that is just another bullish case for gold and for the gold miners, right? You have things like Barrick Gold, GOLD, and it's hey. Dollar keeps climbing, gold is flattened, and this thing's holding near highs. And, I know when we talked about Barrick right back here in May, in no way this thing can't move up to 14 or 15 or 16. Well, it's now at 17. And to see this thing move into the 30s later on this year is probably what we're going to see. And, I think some of the stuff that we're seeing right now is just greater evidence that is what is most likely to happen here as we go forward. All right. Very strong consumer confidence data here this morning, much better than expected. Which is also kind of giving the dollar a little bit of a lift, but overall bonds, slightly higher here. Keep an eye on the banks. If there is a hard Brexit, banks are going to get sold. Banks are going to get sold. Banks are going to pull back. They could pull back pretty aggressively on a hard Brexit. I'd love to get back into Bank of America for the challenge. We had to back out yesterday because of the time stop. It's pulling back a little here, but we need to see this thing pull on back. I'd love to see it pull back to around 29.5 and then get another nice little upside crossover and trade it again. But we'll see kind of how that plays out. So for now, challenge just in Honeywell and holding on to that. And we'll see kind of how Vulcan turns this afternoon, how some of the metals like Alcoa, FCX, and U.S. Steel turn this afternoon. We do have other downside crossovers on things like a Netflix, but as it sits this morning, there was kind of no chance of it triggering. That could change by this afternoon, but kind of where it's sat, no real good chance of triggering. Just very high consolidation risk component associated with that. Okay, so anyway, that's some of the stuff kind of going on out there here today. All eyes are going to start to turn towards Apple earnings after the bell, Fed tomorrow. And I'm sure there's going to be a few tweets or two. It's just going to be one of those weeks where it's just absolutely jam-packed, and probably not the busiest week of the year. We'll probably get one that's a little busier in October, but to date, the busiest week of the year in terms of data and information coming out at the markets. Thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you this afternoon. Take care.